I've got a confession to make.
I need to get this off my chest. As a business owner, we all make mistakes.
I've got to confess.
And we are live. Mr. Kim Barrett, how you doing, dude?
Doing awesome, man. How you doing?
Yeah, really well. It's been a good week. We're just coming off a long weekend in Melbourne. I've been very, very lucky to have one of those weekends with lots of thinking time, a lot of reflection, a lot of looking at how I'm doing business and why we're doing it or why we might be doing certain things. How about yourself?
Yeah, it's been good. Obviously, we haven't had the benefit of a long weekend. We've been working hard all week, but no, it's been very exciting. So I had my GM was away last week, so it was definitely interesting. Me juggling everything and making sure everything ran smoothly while she was away, which it did. So that was good. That's always a win.
Now, I think we always get our best lessons when we are away or one of our key team members are away. And it's always one of those times you go, right, well, this needs addressing. So do you have any of those insights?
Yeah, a few things there that were that popped up. Mostly it was just in some probably internal communications because there was a few things that happened that I wasn't aware of, but she was fully aware of. So I didn't get myself updated on those, which was probably, my bad. And I was like, we didn't have an effective place for that communication to happen. So again, it was all good and now rectified, which is awesome as well.
I feel like we could do a whole episode on team communication and managements of projects at some point, and we probably will. But we're leading in with a very, I want to say this is a passionate topic of mine. I get a little bit fired up just thinking about it. I'm kind of itching already. But do you ever have one of those weeks where it's like, it doesn't matter where you go, when you talk to someone, it's like the same questions or the same type of problems just keep coming up over and over again? Or you've been, driving your car and then you just see the same car over and again? You ever have that happen?
Yeah, the old, as they call it, the RAS, the reticular activating system seems to pop up, or, law of attraction, whichever camp you want to fall into. But I had the same thing. We were just chatting before we started this last week, where consistently having the same thing over and over again so that I had to do a video about it. Mine was, and it's kind of probably a little bit in alignment with what we're talking about today, which is money, cash flow, and things like that. I feel like we need, from The Apprentice, that little money, 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 before we start this conversation. But we can use that. That's a great grab for the audio guys.
We'll use that grab. I don't think we can get the royalties to that song. I don't think we're at that level yet, but we'll work on it.
We'll get there. We'll get there eventually.
But yeah, it's been one of those weeks. So I get to speak to a lot of business owners every week. And I think it's, it's so awesome to get to hear these insights. But overwhelmingly in the last, I want to say 2 weeks, I keep hearing this thing on repeat. Cash is tight. Our cash flow cycle is poor. I'm not sure about pricing and how we're doing these things. And I really feel like when people say these things, the thing that annoys me is they don't do anything about it. And then I've come to the conclusion that most business owners want to just complain about poor cash flow and profit strategies and all the rest rather than learn these lessons. So we're going to make this very, very special episode just all about improving pricing and cash flow strategies. So I'm really looking forward to this one. Now, have you got any stories around this? What is any hard lessons we need to confess before we dig into some real strategies and tips here? Because I don't think anyone goes into business knowing this stuff. This is School of Hard Knocks stuff.
Definitely not. I feel like we could be here for about 6 hours just talking about the lessons and confessions. But yeah, mine's definitely, and it's like, to be honest, still we've put a lot of things in place, but I still have the perceived tight cash flow cycles. And that's purely because I'm still dealing with a lot of issues that I rectified last year. So last year we made a lot of changes towards the end of the year, and I'm still kind of bearing the brunt of those decisions, which is fine. I mean, we're getting through them, but it's like it's one of those things as like what we do a couple months ago still affects what happens today. We talked about, I think it was last episode or a couple episodes ago, lagging and leading indicators and current indicators, which are always interesting. So yes, definitely. I think probably one of the bigger ones is, and I think we'll talk about a lot, but when it came to the cash flow, not effectively pulling the wool over my own eyes in the fact that, let's just say I had my allocations for taxes, GST, super, PAYG, blah, 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 all those things, and going, well, actually, no, I can just dip into that for a little bit to cover this because I want to do that. And, it's for growth. It's for growth. So, it's for this. So, of course, that's fine. When in reality, not really fine because you should still have all those things allocated, covered, set aside. So I think that was probably always the bigger one, and why now as well. I'm, apart from like managing and watching, I'm somewhat removed from making those decisions, and there's other people that have to tick the boxes before I can make those calls now, to make sure I don't fall back into that old habit as well, which I have broken, and just making sure that stays broken also.
Ooh, that you can feel me looking at you with like big eyes at the moment, can't you? Like cringing, because that's a red flag. But we'll get into that. And there's so many good points to come into this. But I want to share some of the stories on this one. I feel like this is my chance to really confess. Now, I had something happen in my life when I was maybe, I want to say 17 or 18. I might have even been 19, right? Where a friend of mine, and this was my first lesson in cash flow, was a friend of mine was given a carpentry business. So he'd done his apprenticeship and his boss wanted to retire, and he gave him the business. He got given a working business, and the old boss stayed on as a bit of a mentor to kind of help him get used to the work and everything. And I mean, how many business owners would kill for that, just up straight up? So this guy hit the jackpot. It was a working business, profitable business. His boss had it for many, many years, constantly had produced, had great records, great relationships, everything like that. So my friend took over this business, started working in it, started making substantially more money than he was used to, and went out, and the crux of it was bought a jet ski. Okay, so he's making this money. He bought a jet ski, and then do you know what happened? Tax.
I was going to say, big tax bill.
Yeah. And then he couldn't sell the jet ski for the amount he had paid. So what he actually happened for is he had to take a big loss on the jet ski, couldn't get above his cash flow cycle, didn't want to learn these lessons here, and bankrupted in a very, very short amount of time. Now, this guy was a really good carpenter, or a chippy, or whatever you want to call him. But like, this absolutely unrailed him. Like, it absolutely took him to the cleaners because he didn't understand these concepts and how it all works. So that was something I saw happen very early on before I even had a business. And I think it kind of forced me to kind of take it seriously, to not muck around, because I'd already watched one person pretty much destroy themselves. They're all right and they're doing good now, but they certainly destroyed that business on the back of buying a jet ski. So I was very cautious on this tax thing from day one, and I learned that lesson before having to spend it myself.
Yeah, that's such a good lesson to learn and see, because it is, I think, especially when you're younger, you go, wow, like, I have this money. And I think even if you're in 20s, 30s, and it's like your first business and you're going and you see, like, I still think, like, as soon as you see the money, like, when you see the money there, like, well, that's my money. Like, that's what you're used to, right? When you're younger, and it's like, hang on, no. And that's why it's like we have now a complete, like, our tax and everything account is a completely separate, not in the same view as the normal window for things, because otherwise, I think it's just you're conditioned when you're younger. It's like, well, that's my money. That's thing. It's like, well, actually, no, you've got to have all of that aside, especially once you start to take on staff and you have superannuation requirements, PAYG, all that sort of stuff. You need to have all those things set aside, which is also daunting, and I think also a factor that people don't take into consideration when they do take on their first hire or look at how they're paying themselves and things. And that's why it's great to have so much advice. Obviously, you're very lucky you have the amazing B backing you up with these things, because I think even when people set up a company to save on tax and only pay a 30% tax threshold, and then they realize, oh, well, hang on, actually, I've been taking director's drawings and now I have a loan against the company for all this money when I should have been, there's so many intricacies in this whole realm, which is why you need to have the right support and, as we always say, the right people around you, because otherwise it can be a ridiculously hairy situation.
Well, that's where I almost have to confess my second lucky situation. I wonder how many entrepreneurs would honestly have loved to have shacked up with an accountant. So I would say, again, entrepreneurial jackpot. My partner, B, or Bianca, which she'll be listening to this and she'll be happy she got a little shout out, is actually, she's an accountant and a bookkeeper and has CFO experience. And like, to have that in the same house has been overwhelmingly useful. So to imagine having, you know, a CFO that you sit on the couch with at night. It's like, it's been a brilliant thing, and the clarity she's been able to bring to my numbers and understanding of them is, certainly been a big help. So that's the second confession. But again, this is where it gets upsetting, is I've got more confessions to make, and I have this in my house.
Well, I used to work at an accounting firm, right? So I went my first job out of school, 17 to what would have been 22 years old, was working at an accounting firm. So same, like I know all the things. I had set companies up, structures for minimization purposes, understood all the principles of things. And still, when I created my first business, it was like, oh, cool, I'm just going to do this like this. And then, you don't find out until after. But I think that definitely comes down to some of the learnings and principles that people should apply. I think obviously the very first one across the board with anything is always like speak to the right people to get the right advice, because I think when we all start businesses, and I think like I semi did this, but I was lucky that I did work in an accounting firm, so I had the right people to ask, is that you go, oh, my buddy Charley started a business. What'd you do to start your business? Oh, I did this. Oh, great, I do the same thing. Versus getting actual advice. First of all, before we even start looking at the profit and cash flow, is like your structure and how you have yourself set up, number one, and then otherwise, like, all those principles as well, kind of you sometimes end up digging yourself deeper into holes.
Absolutely. All right. So we can both agree that, one of the biggest lessons here is making sure you're getting the right advice from the right people in these things. But I want to go into a concept now. I want to start talking about specifically cash flow cycle, because I feel like this is the missing part for a lot of business. And I want to use a story again, because I think like stories really help people grasp concepts. Okay, so just imagine this. So at the time, I had started a digital marketing agency called PPC Empire. So we were doing a lot of Facebook ads, things that are similar to what you do now, Kim. And I felt like cracked the code. Right, I'd come up with a winning offer. I'd all of a sudden had a lot of clients coming in and wanting to work with me, and the business grew at a space of, it grew about 5x in the space of 3 months. So we 5 times the amount of revenue coming in a very, very short amount of time. Now, what I didn't allow for was that when you're bringing in that many clients at once, how much cash you need to be able to facilitate to service those clients. So when you've got to bring in this many clients all at one time in this type of business, there's a lot of work that needs to get done. In the beginning, you have to outlay the cost of staff and systems and equipment and all that to have the work done. And I hadn't done any of that. So what I did is I brought in all this work, didn't have the resources to deliver it, and had to spend cash to hire people to get them trained and all the rest, and couldn't actually pay myself. So even though the company had gone 5x and the perceived, I suppose, profit had gone, massively increased, I ran out of cash. I had to dip into my savings and couldn't pay myself for a long duration of time in order to facilitate that growth cycle and things coming into there. So when I look back on this in reflection, it's like growth actually couldn't have taken me under. And I see this really, really commonly, that if you grow too quick and you don't have the necessary cash flow or resources available to deliver it, you can actually go under. That's how growth destroys a business. And it's the cash flow cycle.
Yeah, that's so important. And I think it's a lot of people have it, and it's like you literally can grow yourself bankrupt. And I think everyone just thinks there's growth, more sales, whatever it is, as great, let's go, like, do it. And they don't necessarily look at the different areas. And I think like one of the best books that I've read, and I'm going through the second version of the book now, was The Goal by Dr. Elia Goldratt, I think it is. I think that's how you pronounce it, around the theory of constraints and looking cool. If this happens, what are the constraints and how much is that going to cost me to alleviate that problem? And it's always, you're like, oh yeah, but next month I'm going to have all that cash come in again as well, like monthly retainer model for marketing and things. And you go, yeah, but that's a whole month, and you chew up all that. Like, I've never seen money go so fast in businesses as when you're growing. It's like literally, cool, 30K hits the account today. It's like, yes, tomorrow, where did that 30 grand go that we just had? And it's like all these things that require money to go in and out, and it's just absolutely crazy. But my question to you is then, Mr. Charley, sir, if that's the problem, what's the solution?
Okay, so this is the lesson out of that, is that I would have done much better off if I had covered that growth rate over 6 months instead of 3. Even 9 months is actually growing slower, and taking fewer clients on at a time would have been able to produce better cash flow. So in some cases, you've got to be willing to go slower. Now, this is where I think there's a bit of a conflict, because and it even I'm gonna even press on a button here of thinking this is maybe ties into what you said at the start of this episode, but it's that when your ambition is to grow quickly, your ambition is to grow at that pace, and you're even pushing yourself to grow at that pace, but your financials may not dictate the capability to do that. So it's like you've got to bring this level of awareness of how fast you can actually afford to grow. Do you have the money to grow at that rate? Like, I know right now we don't have the cash flow to double Outsourcing Angel overnight. And I'll explain why. If we were to, let's say, double the amount of clients Outsourcing Angel had overnight, okay, to recruit that many staff, so to recruit that many VAs, how much that costs the company would bankrupt it. So when I look at this, I'm spending all this money to find people before they start. I'm also spending money to onboard them in the business, collect their info, the admin staff, provide training resources, load them into our project management system. Like, all that work has to get done before we collect money. And that is more cash than the business has. Where I look at it and go, well, look, we definitely can't do that. But what I know dictating from our cash flow, and as we do, is that I can afford to put this much in, and this actually affects our growth rate more than anything. We know how to turn our marketing up, but that would actually send us broke. And I think there's a really big distinction in bringing that into the awareness, especially into business owners that want to grow aggressively.
That's such a good point. And I think one of the things that same that what we looked at, and especially for this year, is looking at growth strategies that don't involve additional team for us, because that was like the biggest expense. Because a lot of our team, or majority, 99% of our team, is based in Australia or Perth. So the wages aren't exactly cheap either. And that's what we looked at. 2 things to improve our cash flow in that regard was, number one, looking at focusing a lot on our products and systems, where it's we've done the work and the man hours first, and then we have something that's sellable and scalable that 1,000 people could buy tomorrow, not a problem. So focusing on that is number one. But number two, when we were looking at our done for you services, our monthly retainer work, is building in that room for growth, which we had from a setup fee. So we used to do, so for anyone that's hired someone to manage their marketing or be on a retainer from maybe an outsourced marketing model, is normally they have a retainer, let's just say it's $5,000 a month. And we were just charging that first month done, and then each month after that. And what we started looking at doing, and we started doing, was adding in a setup fee, which is normally around 50% of what the monthly fee was, to give us the extra cash flow to assist in if we did need a bit of extra work when we were getting heavier, like when we had a lot of teams. It was like, cool, well, even though we had that 5K coming in, sometimes it wasn't enough to suffice for the first month when we had all these other additional expenses and things. We added in that setup fee, and it kind of gave us that leeway and room to breathe. Because if the guys were already at capacity, and we had, another thing I learned from Charley is having people, on the bench available to kind of come in if we needed help and support, was then going, well, if all the other guys are at capacity and we're running pretty tight already, if we then add in more work, it's like, well, that's an additional expense to bring in that extra person that we may not have necessarily had in our cash flow and projections to manage them. Then by adding in that extra little setup fee at the start, it did allow us that extra bit of room to breathe, to improve our cash flow in that area, to suffice if we had to have someone slot in that time to help us to fulfill on what we sold also.
That's so smart. It's so smart for many, many reasons. So let me just ask you a quick question. Is the first month when you bring in a marketing retainer client the most work, the most hours, the most thinking, the most effort?
Yeah.
By how much? Let's be real. 50%? 100%?
Yeah, probably between 50 and 100%, really. Like, it's a lot of, the first month is pivotal.
Yeah, so it's a loaded question. I was in this space. It was the exact same business. You can see where I'm going with this, is that, okay, so like for all the marketing businesses out there, and you can slap any word, it's a lot of service business in general, but anything on a retainer, chances are that the first month is actually going to be the most work, because of just the onboarding and admin alone is going to increase that. So doesn't it make sense to charge more in the first month when you have the most of the things coming there? Because I think in theory, like we all have this like, oh, it'll come out in the wash attitude. Like, oh, down the road, 12 months from now, will it'll even out. But the reality is, you're paying for that growth today. You're actually, you're deferring that cost to your business down the road, and that's what eats into the cash flow strategy. The other side of that is, unless things have changed, it's like every client has an acquisition cost. So you're also spending money before that to acquire that client. Like if you fly to an event and speak at an event and that's where you get that from, is you've spent that money on acquiring that client. So this first month in a lot of these types of businesses, and tying back into the story I was about before, is like this is the thing that's invisible, that's not being priced in or factored in for a lot of businesses. And I think this is a huge contributor to why cash is so tight for so many.
Yeah, 100%. And it's funny, as you say, like, and as well, I think a lot of people, let's just say that you're in an industry where you are on that retainer base or service base, they get scared that by adding that on and they're going to lose a sale or nothing, something's going to change, and that's going to be the even worse effect on their cash flow. But I would say that we had absolutely no drop-off rate by adding in a setup fee. Like absolutely no change in close rate or anything like that by doing it. And it does make logical sense. But I think as well, as you say, like there was these guys, and it's annoying because they still haven't finished this software. But I think especially when you do now, I'll put a caveat that most like accounting and law firms and things like that do this well. And for some reason, as soon as you step outside of those industries, no one does it well enough, which is looking at the attributable time billing. I would say that outsourcing angels would probably be one that does it because it's hourly based work, right? But when I used to work at an accounting firm, we had 6-minute billing increments. Everything that we did had to be tracked down to the minute, and it was attributable to a client, and it was billed and based on the hours that we worked, right? And so we could see very easy pull each month profitability reports based on per client, based on the profitability per employee and things like that. But especially in marketing, like, or at least I could be wrong, but like we never had this set up properly. Like we have it now where we have time billing and tracking available to every client, but and these guys, there's the reason I mentioned is this guy is building a system specifically for marketing people on this, where it ties into Xero everything and it pulls all the reports perfectly and beautifully for you, which is I'm just pissed that they haven't done it yet, because I really want the software so I can pull the reports too. But so many people don't do that and look at, cool, what is the actual profitability based on each client per person, all these things, and most people don't do it. So I think that's something that's so interesting in those industries that is not done in many other industries as well. And Chris Benetti's just walked in. He's just made a sale. He's all excited for the funnel division. He's walked in behind me and done a little gong on our sales. So there we go. The sales gong has been rung. So he two sales.
I'll allow it. That's completely fine. Two sales. He can come in and dong anytime. Big shout out to Chris Benetti, and congratulations on those sales, because he won't be able to hear me in Kim's headset. But when that comes around, dude, massive congratulations. But I really want to talk about that a little bit more, because this kind of ties into pricing as well. I got to put it out there. Most people I speak to wouldn't have a clue how much time they're really spending on work at all, and how it's being attributed. Like how much time per client, how much time are they spending in meetings for these clients, or talking with their team about these clients, or any of that, which begs the question of like, how is it possible that your pricing is correct if you don't have an awareness on these numbers?
100%. And that's the biggest thing that I think is like, it blows my mind. And then you speak to people about this, right? I'm going on a little mini rant and I'll hand it back to you.
Do it.
But like, for example,
have you got a mic to drop? Before you start, have you got a mic to drop? I want to be prepared.
I don't. I've got a pen. No, but so for example, I speak to my partner, Lily, and I speak to her about, let's just say it's getting someone to clean her school, right? And she's like, oh, I've got to pay someone $20 an hour to clean the school. And I was like, your time should be so much more valuable, but she doesn't know how much her time is worth because she's never done the hours. And the amount of hours that she worked, I think we ended up working it out that she was earning like $6.74 an hour, but like less than someone at McDonald's would get, because she works so hard and so much. And that's why it's always interesting and funny when you see they go, oh yeah, I'm charging too much. And it's like, do the numbers. You're actually charging like too little based on the amount of time, energy, and effort you put in. Like, it's ridiculous the rate when you actually start looking at how much time, and it's like, that's why when people, for example, they tell me they go to face-to-face meetings, I'm like, even the guys in my office, my sales team, they go, I'm going to go out for a face-to-face. I'm like, no, you're not. I was like, you're going to waste an hour just in travel time. Then you're going to have a conversation with them there. You're not going to close them there because you're not going to get them to pull out their credit card in the middle of Dome Cafe. I just know that's going to be the case. Then you're going to have another call with them after, when you could have just had that call in the office prior to going there, as opposed to going there and wasting both your time. Like, it just absolutely blows my mind when people think otherwise in relation to that.
Dude, we're pressing on a lot of buttons here. We're really, like, as I said, this could quite easily turn into a blowout episode where we might have to cut it into 2 parts, but we'll keep it in one. But I think there's a lot of things to be looking at there in time. I guess, how much time is going into these things. So this is like tying into the next point in pricing. So I'm going to run that. I think there's 2 things that go on. Okay, are you ready for this? One is confidence to sell at a higher price. So people can't confidently sell in a lot of cases, or can't confidently put on their website a higher price. They have a perception of what their product is worth or what it's worth to the marketplace, and they kind of hide behind it. So it's like, they couldn't confidently double their price without feeling like, something on from there. The other side of that is, like, they can't confidently say what goes into delivering their product or service or the hours and costs associated with it. Like, I'm still yet to see anyone, when I ask to see their pricing, for them to factor in growth or marketing. So it's like, okay, so when I look at your pricing, there's like, and this is a really, really common one. I just want to go over this one. Okay, a very common one I see is people will do 3 times delivery cost. So whatever it costs to deliver a product, to price it to the market, they go 3 times. Okay, and that sounds really good. It's like, wow, so if I'm going to hold up this phone. So you can make this phone for $500 and you're going to sell it for $1,500. But then it's like, okay, that sounds really good in theory, but then they're not taking into the hard costs of the business. Like, what's your rent? What's your internet expenses, your phone expenses, your travel expenses to go and do it? What was your marketing costs to acquire that client? And then quickly this margin kind of shrinks more and more. And then it's like they go, well, and I actively want to grow my business. So I want to invest in new staff. And I'm like, okay. I'm listening. And I'm like, you realize you're going backwards. You can't actually afford to grow. And then what happens and I see this a lot as well, is the business ends up cash poor, and they can never afford to hire the right people or get the right services or do the right things so they can go to that next level. They kind of end up reliant on like free Facebook advertising or something, or like, getting leads out of Facebook groups or the, referrals that don't cost any money to facilitate anything in the business. Like, there's just not enough thought into the pricing to ever allow them to have A players or anything like that as well. How do you feel about that statement? Is that too cruel or fairly accurate?
No, I think that's 100% accurate. And that's, and I think that is, especially I think in today's world, and I'll just throw it out there for people in the entrepreneurial space, right? They see all these things where people sexify and popularize growth and aggressively growing and things. And I think it's like, it's after a while of doing that, and I'll be like, hands up, admit, confession, like I definitely chase that down.
Can I put 2 hands up? I definitely did it at least twice.
Yeah, exactly, right? Like, it's like every day, it's like in the morning, I consider, it's like, cool, I'm just going to absolutely blow the crap off things. And the other times, like, consolidate and let's pull things in. But it's because I think it's so popularized in front of people, I'll say in the entrepreneurial world, that people kind of forget about the consolidation point. And it's like, my focus currently is like, cool, consolidation, bringing in cash, bringing up what I think it was, again, something I learned from you, Charlie, probably a year or 2 ago, our 0 point, and being like, cool, it's actually not zero. It might be $50,000 is your 0 point. And that's like the baseline of your business. And it might be 3 times your monthly expenses or whatever it might be, is having that and building that level up as a goal, as opposed to just going, oh yeah, cool, I increased my turnover, my sales increased to, from 100 grand to 150. It's like, I'd rather now have my 0 point increasing by 10% a month, as opposed to necessarily my sales and revenue, because that's going to allow for growth. And in reality, no one that I know that has a business. Like my business, I'm not here to do business until next year. Like it's a long-term business that I want to have for my life unless I choose to sell or do something else. So, why necessarily am I in such a rush? Like no one walks into year one and then goes, I want to take my tertiary TEE or TER or whatever they call it, exam for year 12 today. Like that's just ridiculous. No one would do that. But, when we go to business, it's like, unless we have that tremendous growth in 6 months or a year, then, then we're a failure, if you will, or we're not perceived as being good in business because you don't have that. But, because let's just say that we walk in a room and there's a conversation, everyone's speaking to the person doing $1 million a month, but who knows how much money they have in their bank account versus there's a guy in the corner who does 100K a month, but has $1 million in the bank. Like is necessarily like which one's sexier, which one's having the conversations? Probably the big $1 million a month kind of person is where people go and talk to, but that's, they may only have 20 grand in the bank account because all their money goes into growth and gets burnt and churned.
Well, I've met plenty of broke 7-figure earners in my time.
Yeah.
I'm sure you have too.
Yeah.
All right. So I want to lead into another story here because I feel like this is a really important one as well, is that I think a lot of people when it comes to pricing, price for how they are today and not how they want to be in the future. And I'll throw something out from here. Is like in my course, when I've had people come through and like really work on their business with me, I look at it and I go, one of the first things I make them do is draw out what their ideal business should look like. So I go, how much revenue are you doing? Okay. And they go, 2 mil, 5 mil. And it's like, great, awesome. Okay. And then what are you delivering? Like, what's your product and service? And they go through and then I'm like, draw out your team and what you would need to deliver that. And it's like they'll put in a CEO, they'll put in all these people, a marketing manager, and it's like, great. Now, what I want you to do is get on Seek and actually look at what it would cost to have that team, have the office, have everything like that. And ultimately, what comes back and they go, there's this look on their face like I've just like broken someone's heart, like I've just literally like knifed them like right through the back, and there's this look of despair. And I think there's a really big gap where it's like, well, people look if they had their ideal business, what it would cost to run that per month. And then they realize where their pricing ultimately really needs to be because they've got to be priced ultimately to cater towards that, not where they are today. So again, I'll tie to an example here is that a business can be really cheap to run when it's just you because you don't have to spend any money on communications. You know it all. But a business gets more expensive to run when you start adding management layers because every time you add a management layer, that's a tier of pricing that comes in that needs to be factored in. So a really, really common one I see is when people go from that stage where it's just them and maybe a few staff that work around them to them wanting to bring in a CEO or a manager or anything like that, they realize the cost of running their team or the equipment or anything to there doesn't happen. Now, why this I think is so important is because when you look at a business, if this happens and rolls out and then you go, right, well, I'll just start pricing it higher when I get there. So when I have a business of that size, then I'll increase my pricing. The problem is, and I wonder if you've ever had this, Kim, I know I have to own this one as well, is I end up with a whole bunch of clients on legacy pricing. So I end up with clients that pay me what used to be profitable when I was working, in a smaller team, not what's profitable as a bigger company. And it's a real danger point, the old legacy clients on legacy pricing as well for the profitability of a business.
Yeah, it's ridiculous. And we've just literally, I think probably our last legacy client went yesterday. It was just when they finished up. So it's 100% true. And it is so hard. And as well, like if you get there on the, let's just call it for all intensive purposes, legacy pricing, if you get to the point of that business at that size that can then afford those people, you actually can't afford those people because the overheads will be so much because you're running on a lower cash and profit really percentage in the business that is not really apparent because it's like, oh, we have all this money coming in, money coming in, but it's actually not. That's why you need to start doing and increasing those prices and making those changes. As you said beforehand, when you know what the goal and outcome of the business is. And obviously as well, that's not like set in stone for life. But if you go, cool, my target is this by this point in time, then you just need to start acting in that manner to achieve that outcome now rather than trying to do it later, because it's much more painful and hurts
Ooh, yes.
a lot more doing it later on.
Okay, so we've gone through a lot of confessions here and stories and stuff, but I feel like we should give people some active tips. And I feel like you've already given one that I want to highlight back to, is that if you're in a business like a marketing agency or anything with charges that has a monthly service and the first month is heavy, Kim Barrett's strategy of, putting in a setup fee or taking more money up front when the most effort is required is definitely one. But let's just do I want to do some back and forth, maybe our top threes, and you can't already use that, on things people can do to improve their pricing and cash flow. Like, how can they really make a big difference here?
All right. Well, I want you to go first because I've already given one, even though it's not counted in these three. But what would be your number one?
Do you know the one that keeps coming up overwhelmingly for me is you have to know your numbers to be able to price anything effectively. And I mean know them properly, not guesstimates. Like, you really have to be in touch with your P&L, your cash flow report, what it really costs for you to deliver a product or service, and what the future needs of the business are to grow. Like, if you're aware how fast you can grow, you can be so much more effective as a CEO and how things work. So number one tip is know your numbers. You have to really know your numbers on many levels there.
Yeah, and mine, I would tie it and use it. It's very similar, but I think and it doesn't have to go to the extent that I did at the accounting firm, but I think you need time if it is service-based time tracking, 100% on a client-based and project-based basis, right? Because I think that so many, because as you say, there could be, and there always is, there's one client that chews up all the time and some that take none. And when you look at it across the board, you're like, cool, 40, like 120 hours on my 3 staff, and this was the outcome of the income, versus breaking it down per client and things like that. As I said, it doesn't have to be that intense, but there's a reason why accountants and lawyers do it at that level and they track it so well. So I would definitely recommend number one is time tracking per client is definitely huge, and make sure it's across the entire organization, not just one person.
Yeah, absolutely. So what's the number two then? Does time tracking get your number two there?
Well, I'll say that's my time tracking is my one of three. My one of three. I'll still go for 2, but I'll throw back to you for your number 2.
Okay, so this is my next one. I think this is crucial, and there's no excuses for this anymore. So it's get more upfront. Like, if you're in any type of service where you don't collect the entire payment upfront, and there's lots of them out there, and I know there's lots to do, even if you can get more upfront than you are currently, it stands to really benefit your cash flow. So I know there's a lot of businesses out there that might, have a settlement payment. So they take a little bit up front and then have a settlement payment, or do a half now and half later. But the more cash you are collecting up front, the healthier your business will be to solve problems. Now, I want to throw a little caveat on the end of that, is with things like Afterpay these days, and a whole bunch of other tools out there, you can actually collect all your cash up front, and then Afterpay, which is a third-party payment service provider, will collect the ongoing payments from there. So anytime you can do it, is that I'd rather have even a tiny bit less cash and get it all today than spread it over the longer from there. So any way you can improve getting more cash up front is my number 2.
Yeah, snaked my number 2. That was going to be the same. So I'll piggyback and then I'll give another one, because there is also so Afterpay works, but not if you're a service provider, right? It's for products predominantly. Then it's very hard to get approved. There's one called OxyPay, which we use for a lot of ours, and it works really well. Instantaneous approval on any service or product, which Afterpay doesn't give you. So it is ridiculously awesome. And as well, if you're in the US, PayPal Credit. Now, PayPal Credit will give anyone with a whatever it is, their social security number, will give them, I think it's up to like $20,000 or $30,000 credit instantaneous, as long as they haven't had a bad debt default, and it goes straight into the other person's PayPal account instantaneously, which is really, really cool. And if you are a business in Australia and you and your clients like they take payment in PayPal working capital works really well, and they can get approved based on their PayPal takings as well, and they pay it back out of PayPal takings. It's really great service. But that was also kind of my point too, was making sure you have not only your cash reserves, like your set 0 point, but also the ability to find those funds, because it's very interesting when there's things that pop up sometimes, and I'm hoping I could get this wrong, but I think probably sometimes there's always something that pops up that hasn't always been taken into account, right? There's always something where you're like, oh, this person got sick and I have to pay them sick pay, and then I need to pay the replacement, and these little things that stack up that are sometimes hard to account for, that need to be then future proof. So having the ability to be able to draw on those things when necessary, I think is always good to have your backup or your emergency section.
Oh, see, I'm almost going to go another way. Is that should be factored into pricing. So if you,
I knew you would say.
I had to I couldn't let that go. I'm sorry, I can't. But it's like you have to factor into your pricing that there's going to be mistakes. So you can't. I used to always go with the basis that if you've got, if you sell 10 products or you have 10 clients, something's going to go wrong. Whether it's lost in the post, sick pay, like things like that, you have to have a factored amount of profit into your pricing that allows for those discrepancies. So I just think that it's inevitable. I've never seen a business that didn't have to allow for this in some way. And if it's not factored in at the pricing level, then ultimately that's where it comes out on the other side. That's where I'm kind of looking at it. And do you know where I got that from? Do you know where it is? Actually from Tim Ferriss's book, when he was talking about the 4-hour work week, when he used to talk about posting things out, and he'd say like inevitably, one in, I don't know how many, maybe it was 1 in 100 things would get lost in the post. So they had to factor in, 101 products for every 100 they sold when they were buying stock. And obviously, there's a few little things like that. But that's definitely one from there. But still such a valuable point, and like some fantastic shares where this industry is going about being able to collect more money up front.
Definitely. So what would be your point? What would be your third point?
Oh, so I need to throw a disclaimer on this one that I am not a financial advisor. I am not an accountant. I am just a humble business owner trying to make it in this world. Okay. But I think you've got to be strategic in how you pay your bills. Now, I do use a credit card in my business. I'm not saying that's right for everyone. Like, please, if debt is a danger to you and you cannot be trusted, don't use them. But if you're a responsible person, you can be strategic about when you pay for things. So what I like to do is, like, every business has a cash gap. If you're an invoice type business or a product business, we've all got a cash gap. But you can use your credit card so that you're only, let's say, paying for online tools later in the month. So you can always create more time to bring cash in between when billing is done or collecting payment or when you're ordering stock. So there's some really, really clever ways to do that, whether if you've got credit cards with 60-day terms, can be a really good one, where you can create space for the availability of cash and kind of extend things out from there. So really, really look into what things are available. But you can kind of look at this right now. I just want to tie these two in together. Is going, if you're getting more cash up front, and you're strategically paying for tools and anything like that on interest-free terms, is like you can dramatically improve the cash in the business, and it has nothing to do with more clients, better marketing. We haven't even got into cost reduction stuff. Like, you can actually just improve the health of a business just bringing those two things in, which is, I think, super, super crucial. So that's what I look at, strategic bill payment.
Nice. And then my last one would be, funnily enough, sales training. So, and the reason for that is we talked about being able to sell at a higher price. Unless you have a system for your sales and a process that you're doing, and you have been somewhat educated in the realm of sales, it's hard to do that. Going from selling something for $500 to $5,000 is not a completely different conversation, but there's a different level of value, trust, desire, all these things that need to be built up in a call that that doesn't just happen. Now, if you're the business owner, yes, but if you have a sales team, you need to be able to give them that support. And if you don't have that, then it can be very, very hard for you to be able to pull that off. So I think that one of the big keys to increase the cash flow, if you're doing these things, is making sure you have a great refined sales process that you manage, you watch like a hawk, and you understand sales and the mindset of sales and things like that to be able to allow it to scale effectively. Because without that, it can be quite hard. Generally speaking, if you're a solo operator, then most of the time it'll be okay because you get by just with the amount of belief and like the certainty you have in what you do, which I think always kind of carries business owners themselves through. But when you have a sales team, it's very hard to do, I think.
They'll never have the Kim Barrett fire. And this is my finger movement right now is fire, just in case there was wondering if you're on the video. But that could be a whole nother episode in itself. But I definitely agree that if you're going to be selling at a higher point, you've got to do it more confidently. And I just have to say, I love that the sales and marketing guy managed to get a sales and marketing point into pricing and cash flow strategies. So you win there. You win. But saying that, if you can confidently collect more cash up front from the sales call because you've done so well out of it, then that's a winner in itself. I want to throw one more point in. I know we're only meant to do 3, but I feel like this is just another one from there. One I've had to look at in the past is that you got to remember that your suppliers are businesses too. So if you're a business that maybe has to order stock or maybe you work with other businesses, one of the things I think we overlook is negotiating terms with our suppliers. So for the hypothetical sake here, I'm going to pretend that I'm in the sand and soil business, so in gardening supplies. Now, one of the things I've seen done really well across here from someone else I know is ringing the suppliers and saying, look, we get paid on 30 days. Can you give us 40-day terms so we can make sure that we can get our cash in to pay you on time? And if they get some kickback and they say like, no, we're going to do that from there, we're going to go, well, if I don't have the cash, I'm only going to pay it here anyway. I'd rather be honest and upfront with you and let's work a system where we can make sure you're getting your money and we can be a good client to yours. And if they refuse, you can always throw in the old, well, we're going to have to look for someone else then. And you'll be surprised when you have those type of conversations, how accommodating other businesses can be to you, which is a really powerful one when dealing with the suppliers. But not only that, you find they really appreciate the honesty. Yeah. So if you're going to be honest and upfront with one of your suppliers, it can completely change the game and really kind of improve even the relationship with being real on how you collect cash.
Yeah, so true, so true. I think that's a very important one because, there's so many different stakeholders in the business and getting to make sure that everyone's on board with what you're doing obviously can dramatically change how things roll.
Yeah, so I think we've covered a lot of things from here, but I think this is it. Have you got any more points to throw on for this episode to help the listeners out there improve cash flow or pricing?
I think we've definitely hit a lot of points already. I think there's a ton in here for people to do. But I would also, if anyone's service-based as well, questioning their pricing, I have a couple of different products where I get people to look at their pricing as part of the system that we have. And I think if you go, cool, like I just couldn't increase my pricing, go through and look at all the things that you've invested in, learned, bought, and all that sort of stuff that goes into your business to work out the total. And then you'll very quickly see how you need to increase it. Because I think a lot of people go, oh, increase your price. And then people go, cool, but I still don't know that that's necessarily possible for me. And then when you see how much you spent on courses like schooling, university, products and systems, all these other sorts of things, CRMs, blah, 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 you go, oh crap, I need to be quadrupling my price, not doubling it. But I think a lot of people don't take that into consideration.
Well, they don't have a choice. I don't think they realize they've got to be able to do it. It's the options are stay here or go broke or increase your pricing. In a lot of cases, it's very, very true. Now, I'm gonna finish out my final comments on this. I just want to say this. Do not copy your competitors' pricing. There's no guarantee they have any clue they know what they're doing either. And that's probably one of the biggest mistakes we see a lot of people making. If you don't have the cost of goods the same as your competitors and you price something differently, you're in for a world of heartache. So please do not copy your competitors' pricing and pretend that is at all a pricing strategy. At all. It's a terrible idea. I had to finish on that. I wouldn't sleep at night if I didn't share that one.
So true.
So we're going to wrap it up on this one. Thank you so much for joining us on this episode. I actually feel lighter. I feel like I've let a lot go on this episode. I've let a lot of hard lessons through there. So thank you so much for joining me, Kim. Thank you so much. That's it for the episode, guys. Peace out.
Bye, guys.